Japan's stock market just exploded higher, and most people watching this think it's a good sign. Green candles, big headlines, confidence everywhere. But here's the uncomfortable question almost no one is asking yet. What if this surge is not a sign of strength, but a warning? What if Japan's rally is actually signaling stress building underneath the global financial system, the kind of stress that usually pushes investors toward gold and silver? Because historically, when Japan moves like this, precious metals don't stay quiet for long. And if you're holding silver, thinking about buying it, or even ignoring it right now, what's happening in Japan could matter a lot more than you think. Before we go any further, make sure you like this video and subscribe to the channel. Because here on Silver Shockwave, we break down what's really happening behind market headlines, not the surface level stories you hear everywhere else. That small action helps this channel reach more people who want real market insight, and it keeps you ahead of the crowd when things start moving fast. Now let's slow this down for a moment. Japan's markets are surging, and on the surface, it looks like optimism. Stocks are up, investors are cheering, and global media is calling it a comeback story. But markets don't move in isolation, and Japan especially does not move without consequences. Japan has been trapped in low growth, massive debt, and ultra-loose monetary policy for decades. When its markets suddenly surge, it's rarely because the economy has magically healed overnight. More often, it's because liquidity is flooding in, currencies are shifting, and central banks are quietly losing control of the narrative. One of the biggest drivers behind this surge is the weakening yen. A weaker currency makes Japanese exports look more attractive, boosts stock prices, and pulls in foreign capital chasing short-term gains. But here's the flip side that doesn't get talked about enough. When a major currency like the yen weakens sharply, it sends shockwaves through global capital flows. Investors start asking where value is actually being preserved, not just where prices are rising. And historically, that question leads straight to precious metals. Gold and silver don't react instantly to stock market rallies. They react to what those rallies represent underneath. If markets are rising because productivity is booming and debt is shrinking, metals usually stay calm. But if markets are rising because money is being devalued, currencies are being sacrificed, and central banks are cornered, metals eventually wake up. Japan's situation leans much closer to the second scenario. Japan is sitting on one of the largest debt loads in the world. Its government cannot afford high interest rates. Its central bank has spent years suppressing yields and buying assets to keep the system stable. When equities surge in that environment, it's often a sign that investors are front-running policy stress, not celebrating economic health. And that matters because global investors don't just react to Japan. They reposition portfolios worldwide. When money starts rotating out of confidence-based assets and into protection-based assets, silver usually lags at first. It stays quiet while gold gets attention. Then suddenly, silver moves fast, violently, and usually when most people least expect it. Another important piece here is industrial demand. Silver is not just a monetary metal. It's a critical industrial input, especially for technology, solar energy, electric vehicles, and electronics. Japan sits at the center of global manufacturing supply chains. When its markets surge, it often reflects expectations of increased industrial activity or supply chain reshuffling. That can tighten silver supply quietly while prices stay suppressed on paper markets. And when physical demand starts pulling against paper pricing, pressure builds. This is where many retail investors get trapped. They see silver not moving and assume nothing is happening. But silver is famous for doing nothing, until it does everything at once. By the time it's trending, the move is already halfway done. Another angle most people are missing is what this means for global confidence in fiat currencies. The yen weakening, the dollar staying strong, Europe struggling, and emerging markets under pressure all point to one thing. The global monetary system is under strain. Central banks are boxed in. They can't raise rates without breaking debt markets, and they can't cut aggressively without risking currency credibility. That's the exact environment where precious metals regain relevance. Silver, in particular, thrives in confusion. It benefits when inflation expectations rise, when trust in paper assets fades, and when investors look for undervalued hedges instead of crowded trades. Japan's market surge may look bullish, but it could actually accelerate those conditions. Now ask yourself this. If stocks everywhere are already expensive, bonds are unstable, currencies are weakening, and geopolitical risks are rising, where does new capital go next? Historically, it rotates into hard assets, and silver, because it's smaller and thinner than gold, tends to move sharper when that rotation begins. This is why here at Silver Shockwave, we don't just watch price charts, we watch signals. And Japan is flashing a signal right now, not a guarantee, not a promise, but a warning that something is shifting beneath the surface. We've seen this pattern before. Markets surge, confidence spikes, headlines turn optimistic, and then suddenly volatility returns. Liquidity dries up, investors scramble for safety. And assets that were ignored for months suddenly become the center of attention. Silver has played this role repeatedly across decades. If you're waiting for perfect clarity before paying attention to silver, history suggests you'll be late. Silver doesn't ring a bell. It doesn't give polite entry points. It moves when pressure finally releases. That doesn't mean you panic buy. It means you stay aware. You watch macro signals. You understand why markets are moving, not just that they are moving. And you don't let short-term calm distract you from long-term risk. As we move forward, keep an eye on the yen, on Japanese bond yields, on global liquidity conditions, and on physical silver demand. These are the quiet indicators that usually speak before price does. When silver starts trending in headlines, the real opportunity window is often already closing. If this breakdown helped you see the bigger picture, drop a comment below and tell me what you think happens next. Do you believe Japan's surge is bullish for metals, or is this another false signal before volatility returns? Your comments help shape future videos and spark real discussion. And if you found value here, share this video with someone who's watching the markets but missing the macro signals. That one share can help someone avoid being blindsided by the next move. Stay sharp, stay curious, and keep questioning the headlines. This is Silver Shockwave, and I'll see you in the next one.